Our next guest says there are 3 industrial stocks to buy right now. Let's go off the charts with Todd Gordon of TradingAnalysis.com. Hey, Todd.
Hey, Scott. How you doing? First, let's take a look at the XLI. This is the sector SPDR that tracks the industrials. And as you can see from a technical point of view, since 2011, we're in a beautiful parallel channel here. There is just no reason to fight this trend at this point. Moreover, where will we start to run into technical resistance? We have more upside to go. We're kind of range bound just inside of this little channel here, so we're neither overbought nor oversold. Within the makeup of the XLI, there's 3 main industry groups we want to take a look at. The railroads, they're going to be defense, and industrial conglomerates. And the one thing that I would mention here is those conglomerates have been very, very weak. GE and 3M have been underperforming. If you take those out, industrials, I think, would be a lot stronger. As I mentioned, defense, very strong. Boeing is in a beautiful, just kind of sideways pennant here. It's caught between a ceiling and a floor. At some point, the trend that was in place prior should break out. Boeing looks wonderful. You take a look at Raytheon, broke to new highs today. Boeing, I think, will follow suit. Next one here is Lockheed Martin. Not as strong as Raytheon and Boeing, but you can see we have a nice classic inverse head and shoulders here. So you've got a low, a lower low, a higher low. Shorts are caught. They're panic buying. They're starting to get on their horse. Buyers are coming in. Momentum, guys. No reason we shouldn't go up and retest that 360. You get my point. Finally, let's take a look at a rail. CSX, again, kind of looking like that XLI, a long-term parallel up channel here. Come on, trend lines. CSX is very much starting to move towards the upper end. You might have another $10, $20 in CSX. You take a look at Union Pacific, UNP broke to new highs. This is kind of a catch-up trade, so I think you focus in on the rails and the defense within the industrials.
Yeah. You got a question?
Quick question would be, I think, Todd, a lot of these things you're looking at, this sort of you overlay an S&P chart looks exactly the same. It's a bit of a sell-off, starting to test all-time highs. You're going to see the commensurate move in the S&P 500?
You know what, Guy, you reminded me, I kind of blew the segment here. Below there was a ratio chart of, I'm just going to, full transparency, right? There's a ratio of the industrials to SPX, Guy, and what you're seeing is there was underperformance of XLI relative to the S&P, but we started to do kind of a hook bottom here in the last month. As Scott mentioned at the top, XLI starting to outperform at a relative basis. So there's quantitative evidence that industrials are coming on here.
Tim's going to try and save the segment.
I mean, I tell you, I wouldn't say you blew it, buddy. Just
Thanks,
it was a small miscue. That's heavy duty. Industrials, though, why are people? You're showing me this chart, and yet we feel like the industrials have been under so much pressure from the trade war. You know, talk about that.
Well, again, I mean, maybe BK said it. Maybe the markets are discounting that perhaps we're going to win the trade war. Maybe they're pushing China to become more of a consumer base rather than be an export technology-based nation. Maybe they're going to be, markets are discounting that they're going to be a consumer demand-based economy and start consuming some of the world's goods and services. I'm not sure. I keep it simple. I'm a simple-minded technician following these trends and these lines. And so far, this market just looks like it wants to point higher.
Yeah. Todd, thank you.
Thanks, guys.
All right. I didn't even know he blew it.
No,
no one would have known he blew it.
Biggest mistake was admitting he blew it. Never let them know that you blew it when you blew it. I mean, as a musician, you never stop. You never tell them that you screwed up.
All right. Industrials this month. Cat 7%, Lockheed 7%, United Tech 6%, Boeing 5%. Does this continue, or is this going to run out?
I would think that, to Tim's point where he just said that everyone thinks that they should be under pressure, or they are under pressure and everyone talks about it, what happens if everyone got so short all of these industrial names against their long techs positions, and now that unwind is taking place right now? So I think you're seeing guys cover in the industrial space because the trade war fell a little flat.
Well, also look at what Simple Todd put up there. He put up a lot of the defense sectors. And we know today that we have a bill that's going to increase military spending. That'll likely continue into next year. So now you have, in this particular sector, trade war de-escalation, as well as an increase in defense spending. So I actually do think you stick with the defense names, Boeing, Lockheed, Raytheon.
I don't know. You guys are saying that the trade war is de-escalating on a day where we put these tariffs on and we're threatening.
I'm saying the market.
What did the market tell you?
Okay, great. The market told us today. That's great.
The market is smarter than all of us individually.
Because it went up
right?
The Dow went up 250 one day.
What should it do? Would you feel better if it went down? And then what? Would it be right if it went down?
I wouldn't feel anything.
Here's my view on this.
We still have no deal
let's talk about the rails because they are certainly coincident into where we are seeing both growth in GDP. We've actually had some headwinds to the housing sector, and yet these guys continue to crush it. I think there's a lot of growth that's priced into a big part of the industrial economy, and therefore that concerns me because to me there's no way we haven't fast-forwarded growth into this economy. I think the trade war, there's no way we were going to have felt this. And as much as the market's a forward-looking indicator, the economics aren't going to be weaker until we get towards the end of the year, and the market will price that in before that. So I don't think you need to chase rails here. I wouldn't be chasing industrials.
The only one I look at in terms I think you still can't chase is Kansas City Southern and Caterpillar. If you go back to the end of July when they reported additional $10 billion stock buyback on valuation and the way it sort of defended the lows that it recently made, I think the most interesting one out of all the ones that, what'd you call him, Simple Todd?
Yeah,
Simple Todd, yeah.
Why simple?
Because he said he's a simple guy, and he's a simple technician.
You picked up
Simple
on it.
Todd, yeah.
Simple in that regard, but he's far more complex.
Do you think he blew the segment?
I think
not at all. I thought he did a wonderful job.
Simplicity is complexity. Let's put it that way.
Good point by BK. I think Caterpillar goes higher.